Good afternoon. I'm Brett Wilsey, and welcome to today's Smart Investing Briefing.
And I'm Chase Wilsey, and we're from Wilsey Asset Management down here in San Diego, of course.
And what's a daily briefing? We don't do that any longer, do we?
It's like a tri-weekly briefing is what we try to do.
We try to get out there as much as we can. We have so many things going on here at Wilsey Asset Management, but we still like talking to you, trying to give you information that you can't get anywhere else. Let's talk today about something that came out that was phenomenal, and as consumer confidence continues to climb. And what's so amazing to me about this is that the president ratings continue to fall. How can people be so optimistic, so excited, when you get the president, they're saying, oh, he's doing a terrible job? Disconnect there. I don't think they see what's actually going on.
I don't think so either, and this is a good report to kind of gauge how people are feeling. It's so important to understand how people are feeling because we talk about it. People feel good. Well, I guess I'll go out and eat. I feel pretty good. You become more social, I think. It's like, you're not so worried about budgeting your money. And this report actually, previously, last month, it was at 114.8. Actually revised upward for that previous month to 116.1. And I'll let you go away this blockbuster number here. It's just
I'm glad
astonishing.
You did that, I thought you were going to take it away from me. The estimate for the number for, and this was for February reading, actually, this was 113.8. That was the estimate. Came in at 125.6. Now, this is the highest level in 17 years. You'd have to go back to 2000. And back in 2000, that was during the tech boom. They had this. So we're kind of like in a boom right now, and a great time to be investing in the right companies because you got to be careful here.
Let's go back to 2006. People didn't feel as good as they did back in 2006 as they do today, which is pretty astonishing given, I guess, where the economy has gone since 2008, 2009. Kind of scared a lot of people away from investing, so hopefully people are feeling good enough where they'll get back into the market.
And one thing that we'll give you that you won't get somewhere else is that we're going to give you how the survey came up, because you hear about it, but what it is, it's 3,000 households across the country are surveyed. And what this means that it's not just here in San Diego, not just in Washington, but across the country is where these numbers come from. And it looks at the current situation and expectations going forward. I think for 6 months, is that what it is?
Yeah, over the next 6 months is what that expectations component of consumer confidence looks at.
Okay. All right, and the company today we don't talk about very often, is Apple, and we're bringing it up because today it hit a new all-time high. Actually, they said split adjusted. If it wasn't split like they did before, it'd be over $1,000 now. So, but what I find so interesting, I think it was about last May, the stock traded at 90. Oh my gosh, it's over for Apple. No one's gonna be buying iPhones. This is terrible for them and so forth. Today it closed at $143.85. The 52-week high is $144.03, and the 52-week low, $89.47. Now, what's amazing to me is their sales are down about 7.2% year over year, and earnings fell by 11.3%, but there's a lot of great things going forward.
Well, we got to kind of look at it and understand here is that's because they're still lapping that 6S cycle is what it's known as. But just kind of funny, going back to when they came out with that 6S, this is when it hit that, not all-time low, but that low price at $89 per share last year. I remember, oh my gosh, as you said, it's over for Apple. They're going to stop selling iPhones. All they can do is sell iPhones. One thing you got to make sure you look at and understand is that service revenue. I tell you, that's growing about double digits. Going to be very big for the company moving forward. But I got to understand what we're paying for the company. It has appreciated quite a bit. So that price to earnings ratio is now 16.9, still below the industry average of 20.1. So that's a positive. Price to cash flow is still strong for the company at 13.3, below the industry average of 13.4. And I'll tell you, the cash is really what just is astonishing.
It's amazing
for this company. Cash from operations in the last fiscal year for Apple, $65.8 billion. Tons of money coming in via cash flow. Allows them to issue dividends, buy back stock, pay off debt, buy other companies, really gives them flexibility. And then cash on that balance sheet right now, $246 billion. I will tell you about 90% of that is overseas, however. So hopefully we can, speaking of Donald Trump, get some repatriation from Apple's cash overseas.
And the balance sheet is pretty strong still. They have a current ratio of 1.2. And what they've done, rather than bring that cash back from overseas and pay the taxes on it, they borrowed money, which they didn't need to do. But they said, hey, let's borrow money. It makes more sense to pay 2 or 3% on the interest versus the 30% on taxes. Their debt to equity right now is 66.1%. Now, going out to September 2018, we're looking for earnings of $10.09. gives you a target sell price of $166.49. I gotta tell you, you gotta be patient here, and it's so funny because when we were buying the stock in the low 90s, we had people saying, "You guys are idiots. Why are you buying it? It's over for Apple." Well, again, I think if you buy it now, you could be overpaying. So be patient. Great company, but it's a little bit pricey right now.
I was gonna say, can you tell we like Apple? I mean, we both have iPhones. It's actually being filmed on an iPhone.
This is my iPhone, but
yeah, mine's actually in my office. But just again, you got to be careful for what you pay for those earnings. No matter how much you like a company, can't overpay for that stock price.
Exactly. Well, I hope you enjoyed this edition of the Smart Investing Briefing. For more information, go to our website, smartinvesting2000.com. That's smartinvesting2000.com, and you got some special information as well.
Special information because you can go to that website to sign up for our upcoming workshop. Will be held on Tuesday, April 11th. I think we've established now it starts at 6:30 p.m.
Yep.
is that time. It'll be held at the Crown Plaza Hotel, and we'll be showing you some interesting numbers here on why what we do makes sense and why it works over the longer term. What we do, just in case you're not familiar, it's called value investing, and it truly is the best way to grow your net worth over the longer term.
And they might understand why we bought Apple at 90 when nobody else wanted it, because that's what we show you at the workshop, why we buy in value. So hope to see you there.